Hello students, hope you all doing well. So here I am Gargi Pamar, Assistant Professor BBA in St. Andrews Institute of Technology and Management, Gurgaon. So here I'm back with an online lecture series on company account subject. So let's start with the lecture. So see guys, in today's lecture we are going to start last topic of your syllabus, that is insurance company account. Okay, so let's talk about the insurance company account. Yes. So let's see statement of insurance company. So first of all, see the concept of insurance company. Insurance is an agreement between insurer and insured in which insurer takes over all the risk of the insured person in consideration of some periodical payment to be known as insurance. Any person engaged in insurance business in India will be known as insurance company. So basically, insurance is an agreement which is done between the two big persons. First person will be known as insurance and the second person will be known as insured. So who will be the insurance? First of all, the person who will insure the person, the life of the person is the risk of the second person. Okay? So the insurance is the person who will take the risk of second person, who will take the risk of life of the other risk of the second person. That person will be known as insurance. And whose risk will be taken by insurance? That person will be known as insured person. Okay, so insurance basically an agreement between two parties, that is insurance and insurer and insured person. Okay, in which insurer takes over all the risk of the insured person, and in return, insured person will pay some consideration, some periodical consideration to, or some periodical payments to the insurer, and that periodical payment will be known as security fee. Okay, now see insurance फी किसी समाज सेवा के लिए तो बैठा ही है। इंश्योरेंस अगर रिस्क लेगा इंश्योर पर्सन तो क्यों लेगा, तो कुछ भी बेनिफिट होगा, उसको कुछ कंसिडरेशन मिलेगा, उसके रिटर्न में कुछ मिलेगा उसको, तो उसके रिटर्न में इंश्योर पर्सन क्या देगा इंश्योरर को, इंश्योरेंस प्रीमियम पे करेगा। ओके, एक पीरियडिकल पेमेंट देगा, दैट इज कॉल्ड इंश्योरेंस प्रीमियम। ओके, so any person who is engaged in insurance business in India will be known as insurance company. So any person or any company who is engaged in insurance business in India, that company or that person will be known as insurance company. Okay. In India, insurance companies are classified into following two categories. First, life insurance companies, and second is general insurance companies. So first of all, see what is the life insurance companies, who are the life insurance of the life insurance companies. These insurance companies can insure only life of the human being, that cannot enter into any other type of insurance. So when a company whose main business or whose business is to insure the life of a person, then that company will be known as life insurance company. But a life insurance company cannot do other kind of insurance like vehicle insurance, theft insurance, fire insurance. These kind of insurance cannot do the life insurance company. So life, if there is any life insurance company, that means that company will do only the insurance of the life of the human being. Okay, so there is some example in India who is there is some example of companies in India who is doing the life insurance like LIC, Max New York, and life insurance. These are the companies who are working for life of the person or insurance of the life of the person. Now, second kind of insurance is insurance companies are general insurance companies. General insurance companies are those insurance companies which insure everything except the human life, such as health insurance, vehicle insurance, fire insurance, crop insurance, theft insurance, etc. So the companies who are engaged to do the insurance for the person except the life of that person, such as health insurance, vehicle insurance, theft insurance, fire insurance, and these the company who is doing these kind of insurance like theft insurance, fire insurance, other than the life insurance of a person, all other insurance than the life insurance of the person, that company will be known as general insurance company. So if there is any life insurance company, that company will do only the insurance for the life of the person, and in general insurance company can do the insurance for the other things like health insurance, vehicle insurance, और other things, not for the life of the person. तो जो कंपनी जिस चीज के लिए एनरोल हुई है सिर्फ वो उसी उसी का इंश्योरेंस करेगी, उसके अदर वो कोई इंश्योरेंस नहीं कर सकती. So there is some example of some companies who is doing general insurance. New India Assurance, ICIC Lombard. These are the companies who is doing general insurance for the public. Okay. Now see, there is a note. The financial statement of the insurance company are prepared according to the provision of the Insurance Act and data rules. So the financial statement of insurance companies will be prepared according to guidelines which is issued by the Insurance Act 1938. Okay, so there is some guidelines issued or some format issued by the Insurance Act 1938, and each and every insurance company has to prepare their financial statement according to these rules or these guidelines. Okay, so now first we will see the financial statement of general insurance companies. So the financial statement of general insurance companies are divided into following three categories of parts. So three accounts you have to prepare for the general insurance company. First is revenue account, second profit and loss account, and third is balance sheet. So first let's talk about the revenue account, which kind of terms or which kind of transaction will be included under revenue account. Okay, so see, in this account we will cover all the incomes and all the expenses which are directly related to insurance business. So the incomes and the expenses which are directly related to the insurance business, only that incomes and expenses will be included and will be recorded in the revenue account. Okay. Then second is profit and loss. In this account, we will cover all the incomes and all the expenses which are not directly related to insurance company. So any other expenses or incomes which are not directly related to the insurance business and the course of the insurance business, then in that case, these expenses and incomes will be recorded in profit and loss. Okay. And third is balance sheet. This is the normal balance sheet which will show the position of assets and liabilities of insurance company of the year end. So balance sheet is the normal balance sheet which other companies made or other businesses are made. Okay. So first of all, see the format of revenue account will be prepared. The revenue account will be prepared as under. So according to Insurance Act 1938, the Insurance Act provides this format for revenue account. Okay, so Form B, RA. We will what will be the heading of the revenue account? Form B, RA. Okay. So first of all, prepare revenue account. So first we will write all the incomes, then we will less all the expenditure for incomes, the remaining amount will be profit and loss, and then we will do some appropriation from profit. Okay. So first of all, let's talk about the incomes. So first you will write the premiums on under schedule number 1. So let's see what is the schedule number 1. See, yes, premium on. सबसे पहले आप पहला शेड्यूल बनाएंगे प्रीमियम in which you will write the direct business, the premium which you receive directly business. Then you will write the direct business premium. Then you will add on reinsurance accepted, less reinsurance seized or the closed or the cancelled, and opening unexpired risk reserve and closing. You will less closing unexpired risk reserve. So the resultant amount will be premium earned, and you will write that premium earned in schedule in reserve account. Sorry, in revenue account in schedule number 1. Okay. Now there is a note for the unexpired risk return URR. The URR will be made at 100% premium for marine insurance and 50% of premium for the other insurance. So for marine insurance, the 100% of premium which the insurance company receives, 100% of premium will be transferred in URR, unexpired risk reserve. So unexpired risk reserve कितने का बनाना है आपको? मरीन इंश्योरेंस के केस में 100% जो प्रीमियम आपको रिसीव हुआ है उसका 100% अमाउंट का आपको URR बनाना है. अदर इंश्योरेंस के केस में 50% का आपको URR बनाना है. So the premium आपको रिसीव हो 50 equal to 50% you have to transfer in URR. Okay. Now what do you understand by marine insurance? So see, marine insurance are those insurance which covers the loss or damages of ships, cargo, terminals, and any transport by which property is transported. Okay. So basically, marine insurance covers all the losses and damages of ships business, cargo business, terminals, and any other kind of transport. Okay. If you face any losses in transport and in ships next schedule is then you will write interest, dividend, and rents income. Then profit and loss on sale of investment. Then other incomes you will write. Now you will do the total of all these incomes. That will be total A. Now you will start to write all the expenses. First you will write the claims under schedule 2. So let's see what will be included in claims. So first you will write the claims paid. First of all, from direct business, the claims which is directly related by the business, you will write that amount. Then you will add reinsurance accepted. Then you will less reinsurance seized. Then you will add closing outstanding claims. Then you will less opening outstanding claims. So the resultant amount will be the claims amount. Okay, that claims amount you will write in the revenue account under schedule number 2. Okay, then third schedule is for commission. So see what is the third schedule. So in third schedule, commission. Direct business commission will firstly you will write, then you will add reinsurance accepted and less reinsurance seized. Then you will do the total of this, and the total will be you will write in revenue account under schedule number 3. Okay. Then next is operating expenses. So for operating expenses, you will prepare schedule number 4. So see what is the schedule number 4? Yes, see operating. So in operating expenses, you will include employees' remuneration, travel and conveyance, training expenses, rent, rates and taxes, repairs and maintenance, printing and stationery, commission, legal expenses, auditors' fees, advertisement, interest, others, and depreciation. All these will be included in operating expenses. You will do the total of all operating expenses and will write that amount in revenue account under schedule number 4. Okay. Then you will write other expenses other than these. You will do the total of expenses. Now the total of expenses will be less. You will less from total income, and resultant amount will be your profit. Current year operating profit. Now you will make some appropriation. If you transfer to reserve, you will write the amount of transfer to reserve here, and the balance amount will be transferred to P&L. Okay, so total will be your here. Okay. Yes. Now second format is for P&L. So see the P&L is here. There is form number D here. So that is also for revenue account. We also prepared form B, but that was form B RA revenue account, and this is form B PL. That means PL. Okay. So let's see. First, you will write the operating profit, fire, marine, and miscellaneous. Okay. So first of all, you will write all the profit, operating profit. Then, if you have some income from investment, then you will write income on investment. That is interest or dividend or rent, profit and loss and sale of investment. And if there is any other income also which is not directly related to insurance business. So in P&L, we will write all the incomes or expenditure which is not directly related to the insurance business. Okay. Then other income which is not directly related to insurance business, you will write that income here, and the total will be the your total income. You will do the total of these two incomes. Now you will start to write some expenses. So see, first of all, you will write the provision other than X. So first you will write provision for if there is any provision for bad debts, provision for depreciation, provision for so. Then you will write other expenses like director's fees, bad debts, etc. Then you will less all the expenses, total of expenses from total of income. Okay. So resultant amount will be PBT, that is profit before tax. Then you will less provision for taxation. So remaining amount will be PAT, that is profit after tax. Then you will less all the appropriation from PAT. You will less the dividend, and you will less the transfer to reserve. If you do some transfer to reserve, then in that case, that transfer will also be less from PAT. Okay. So resultant amount will be your balance profit. Now you will add opening balance of P&L. So the resultant amount will be your closing balance of P&L. So this is the format of revenue account and P&L account. Okay. So that's all for today's lecture. In next lecture, we will see the format of balance sheet. Okay. So that's all for today. Thank you guys.